takes courage to get you outside of the box. It takes courage to be successful. It takes courage to win. People don't talk about people that don't win. If you win, they're going to talk about you. Do you have the courage?
What's up, everyone? I hope you're all doing fantastic. The crypto markets are looking pretty good today. It seems like we've recovered a bit from the bloodbath. Something that has really caught my attention today, however, is every article you see on the market right now is talking about XRP and how we're about to witness massive price action in the short term. On March 27th, the price of XRP broke through its 3-month consolidation pattern, signaling the commencement of a huge rally. Investors can jump on board and ride the wave to critical levels before cashing out. Given the recent bullish narrative surrounding Bitcoin, this outlook makes sense. That said, time to roll that intro before we get into all the juicy details of today's video. As always, welcome back to Money Side, your favorite crypto news channel. If you're new here, we welcome you to the XRP Army. Hit that subscribe button and turn on notifications so you don't miss out on our daily crypto news updates. Now, getting back to today's topic. Over the last year, the price of XRP has formed 4 unique lower highs and 3 distinct higher lows. A symmetrical triangle is formed by connecting these swing points with trend lines. By adding the distance between the first swing high and low to the breakout point, this technical structure predicts a 69% upswing. Surprisingly, the past 3 times the XRP price tagged the lower trend line, it rallied between 70 and 170%. And as a result, the most recent retest, which took place on April 29th, holds a lot of promise for the remittance token, especially if history repeats itself. If the price of XRP breaks out at 0.827, a 69% measure yields a target of $1.40. However, there is no directional bias in this technical configuration. A bearish breakthrough might be triggered by a rapid increase in selling pressure that results in a 2-day candlestick closure below the lower trend line at 0.575. Adding 69% to this point yields a target of 0.176 in this scenario. Given the positive outlook for crypto markets over the last couple of hours, XRP's price could bounce off the lower trend line and retest the upper trend line. If investors take a chance and buy now, the overall run-up will be 128%, with a target of $1.40. XRP's indicators suggest that the cryptocurrency is in the lower range and might be due for a bullish correction. The RSI is oversold and the MFI is currently in the accumulation zone. The bearish trend is still strong, but the DI is showing signs of trend exhaustion. That aside, let's look at what's currently happening with the Ripple XRP lawsuit. Matthew C. Solomon has filed a fresh filing on behalf of Ripple and its defendants. In the most recent filing, Ripple criticizes the SEC's delay tactics while resisting the latter's request for new privilege assertion briefs. The latest developments in the SEC versus XRP litigation dispute have piqued curiosity. Ripple stated in a note, the SEC requests leave to file what they term a reply, but this would be at least the SEC's 6th filing in opposition to defendants. At this point, the SEC has had more than ample opportunity to assert and support its various privilege assertions. Discovery closed months ago, and the parties are on the eve of filing motions for summary judgment. Further delay is prejudicial to the defendants. The SEC, however, continues to uphold the disclosure of documents. The note further stated, the SEC now claims that the last year of briefings, oral argument, the court's decisions, and their motion for reconsideration were all an academic exercise because it turns out that the documents, every single one of them, are privileged attorney-client communications. The SEC submitted a move late in April to reaffirm its contention that the attorney-client privilege shields internal documents connected to a 14 June 2018 speech delivered by Bill Hinman, the SEC's Division of Corporate Finance's then director. The defendants in the Ripple case have requested an extension until May 13th, according to Judge James K. Filan. The SEC's continued accusations about the former SEC officials' emails prompted this prolongation. Ripple released a report on its performance in the first quarter of 2022 amid SEC pressure, despite the continuing SEC lawsuit and macroeconomic and geopolitical obstacles. the research predicted robust growth for XRP. With an 8 times year-over-year increase, on-demand liquidity achieved a record-breaking growth this quarter. RippleNet also reached a new milestone, with clients' ODL for various use cases surpassing the $15 billion annualized payment volume run rate. This quarter, another trend emerged that focused on greater operability. Cross-bridge connections with multi-chain and all-bridge were added to the XRP ledger, allowing XRP holders to move their assets across 12 blockchains. The reported major XRP transactions are easily explained as the result of whale buildup, especially at the support level. After all, the support line has always been respected by the price movement. On-chain analytics, on the other hand, portray a different image. Within the previous 24 hours, the whale transaction count on Sentiment has increased. During the same time span, the total supply of whales decreased. In the meantime, the 2-year dormant circulation has increased in the last 24 hours. These figures correspond to the enormous transfer that occurred within the last 24 hours. Outside of exchanges, the supply confirms a large outflow in personal wallets over the last 24 hours. On the surface, it appears that the whales are selling and that XRP may be on the down. If the whales do start selling, we can predict a failure of XRP's current support and a drop to the bottom. The transfer, on the other hand, could have been between exchanges or institutions. If the latter is accurate, XRP may be able to maintain its support. Retail accumulation near the support level could bring some additional potential in the future. To illustrate in depth about the fundamental process, why emotions are regarded as poison when trading, I've developed a simple model that depicts the relationship between trade setup phase and performance. In this world, ideally, if we can manage emotions perfectly like robots, our trading performance, profit or loss, should not affect the trading preparation setup phase, and thus it would be a casual relationship where an independent variable, the preparation phase, affects the dependent variable, performance, only in one way. However, the more we let emotions kick in by breaking our principles, the more it becomes correlated between these two variables. In other words, as we fail to control our emotions, the performance will no longer be independent and start to affect our judgment when setting up our next trades, either positively or negatively. This will eventually create a vicious cycle where factor A affects B, B affects A, and A affects B again, getting worse and worse, just like sinking into a swamp. Therefore, as a wise trader whose task it is to manage risk, it is integral to be able to cut this cycle before things get worse. We should know how to stop with a small loss before it becomes a big loss due to that cycle. Hence, it is extremely critical for us to properly design and obey the strategies consistently and carefully, and regardless of the latest trending outcome. We should be as neutral, objective, and prudent as possible. Which set of principles, strategy, and mindset should be adopted to effectively eradicate emotional trades? I hate to say this, but the answer would be different depending on your trading preferences and your economic, technical, and physical conditions. So first, you need to know yourself. Here's a fun fact. This thing called trading lets you learn deeply about yourself, stuff that you didn't even know before. Pretty cool, huh? It explicitly lets you know how greedy, fearful, doubtful, and jealous you are under this social system called capitalism. Once you find out about yourself through decent self-reflection, you then need to figure out your trading propensities and the strategies that you're fond of. It is definitely going to be different for everyone. For some traders, a high RR ratio and low win rate strategy might suit, and vice versa for someone else. Some long or short, some short-term or long-term, some high or low leverage. It is significant to find the optimal combination of trading strategies, theories, and indicators, as well as trading products and platforms that fit your trading preferences and behaviors. To give you a tip, make it a habit to always consider the risk first, before the reward. Consider the status when you lose money rather than thinking about the profit. In this way, you will naturally get a sense of weighing risks that you are facing. By prioritizing risk over rewards, you'll be less affected by negative emotions when you actually lose trading, and will also help you efficiently manage your risk in advance. Let's all strive to become a wise and smart trader who always prepared for the worst possible scenario. Remember, it's not the win rate that makes you a successful trader. It's all about minimizing loss and maximizing profit. As always, do your own research and always trade safely, guys. And we continue to pray for the people of Ukraine. Please keep in mind, we're not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. You can let us know what you think in the comment section below and start a conversation. Thank you so much for being here. Couldn't do it without you. Don't forget to like this video and please click on that subscribe button below. And be sure to turn on notifications. That way you get updates whenever we drop new content. Thanks again, and we will see you on the next Money Side.